Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great day over the weekend and was able to enjoy themselves, spend some time with some family. I know that I did. I was not with you on Friday, since Friday I was actually had a little bit of a golf trip going this weekend, so relaxing, having some fun with some friends. But we are back in the saddle, ready to roll. As we are seeing, the markets are basically close to their all-time highs, down just a little bit. And we're going to do what we do every day, looking at our four big picture markets and then our stock of the day. Now, today, not a true stock of the day. Stocks in the news and some things to talk about, especially regarding earnings. But let's go ahead and get started with the big picture. So starting with the big picture, the S&P is down 3. We're down 3, a little bit of some overnight movement, but frankly not all that much. Rallied up at the end of the day or early in the day on Friday, got to a new all-time high, and then kind of sold off of that a little bit towards the end of the day. From the overnight, we opened up, traded a little bit higher and then a little bit lower, but really haven't done a whole heck of a lot. Now, there's some few areas in here on a smaller time frame. There are a few areas in there on a smaller time frame, but really nothing that I am fired up about. And so you may say, well, Chuck, why don't I just short it all the way down to here? And you certainly could if you're willing to take that risk and that exposure. I would say from a short perspective, though, that the NASDAQ was the better opportunity on the short. And so this is the line that we drew last night when we were doing the live trade room, and it was a short below this level here. Now, it went under there at at probably not the most opportune time of day for probably most traders, but it definitely did get a little bit of basing, a little bit of a drop below that level. And so if you took that short, then move your stop to just above this 13,917. Lock in a little bit of well, I guess you don't lock in some profit that way, but you minimize your exposure. If you didn't get that short, look to this wick over wick right here as an opportunity to get back in. That's 13,901 by 13,914 as a potential opportunity. Now, there is a nice clean wick over wick down here on the hourly chart. However, I didn't like that level as much when we zoomed into the 15-minute. When we zoomed into the 15-minute, the thing I wasn't a big fan of was the fact that we had a little wick over wick on the 15, rallied up, red candle retest, little lower wick here, retested more than halfway, and then we popped up. So I wasn't a huge fan of that wick over wick on the 60-minute chart once I zoomed in and got to take a better look at it on the 15. Looking at crude oil, so crude oil is in officially a meh trend. It's in a trend, but of a trend. And so not a whole lot that I'm looking at today in terms of crude oil. We did get a nice little move down right here last night to give us a decent entry on a return back up to 61.91 by 62.04. You could also theoretically take a look at this area here. I don't like it as much on the 15. I like it on the hourly a bit better. But this upper wick makes this a little bit, I like the level that's a bit higher. So, and then gold. And so in gold last night, we had just a lot of sideways price action. We did get a really big sell-off in gold on Friday's open. And so that sell-off still exists. It's a confirmation entry, though, because our big picture trend, to me, gold still has a little bit more bullishness to it. And I think more than likely what we would rather see is basing up in this region for an upside breakout. So you can take the confirmation short, but something tells me that we might wind up getting a confirmation short. 6-candle rule keeps us out, and then it breaks out to the upside. So those are our big pictures, but all of our markets this week are going to be heavily governed by what's happening in our stocks. So let's talk about some stocks that are in the news. So when I talk about stocks that are in the news, what I want to first start with is this heat map. And this heat map that you can see here is the heat map of the NASDAQ 100. And so when I look at this, we can clearly see Microsoft, Apple, Google, Facebook, Tesla, and Amazon, they make up over 50% of the NASDAQ, right? Microsoft, Apple, Google, Facebook, Amazon, and Tesla. And so when I look at those, Microsoft being first, they have earnings coming up on Tuesday. Apple, earnings coming up on Wednesday. Google, earnings coming up on Tuesday. Tesla, earnings coming up on Monday. And Amazon, earnings coming up on Thursday. So my point being is that 50% of our market cap of the NASDAQ 100 is announcing earnings this week. So that should tell you that there's a possibility for intraday gaps in the futures markets and that we may see big moves in some of these stocks. Now, I'm not saying don't trade over earnings. I'm not a big believer in trading over earnings unless it's a very specific option strategy. But understand that when you trade over earnings, you do take an additional level of risk and additional level of exposure. And as we head into the teeth of this earnings season, just be aware of all of these stocks that are announcing earnings and what it might mean for you if you are too heavily invested in the NASDAQ and they all tend to go the same way. All right. Now, they may not. You may get some that gap up and some that gap down, and the NASDAQ stays fairly flat. You may get all of them gapping down, and the NASDAQ gets crushed. You may get all of them gapping up, and the NASDAQ runs higher. My problem is I don't really know what it's going to do, right? A good example of that is, and we looked at this in our live trade room yesterday, was Netflix. Netflix announced earnings. They announced earnings, and the earnings that they announced were year over year were 3 times better than year over year earnings. Let me go back a little bit further. So they went from $1.57 to $3.75. So 2.5 times better. And the stock was down on that news $40 a share, right? So the earnings itself, even if you have really strong earnings, we may see the stocks gap down. And so I don't know that Netflix is going to be a true bellwether of what the others are going to do, but I think it's at least worth considering. So be safe, understand how earnings affect your trades, and have a phenomenal week. But I will be back on Wednesday. Until then, everybody, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.